So up first, we are joined by Brightstar Resources with the ticker code BTR, a company focused on their gold projects in the Laverton Greenstone Belt in Western Australia. So to tell us more, today I am joined by Managing Director, Alex Rovira. Good morning, Alex.
Morning, Jane. How you doing?
Well, thank you. I'll let you bring up your presentation.
So thanks for everyone joining and thank you for the introduction, Jane. So my name is Alex Rovira. I'm Managing Director of Brightstar Resources. Diving straight into it. So we are a gold developer located in Western Australia. So Brightstar is located in the Laverton tectonic zone. We have just under 500,000 ounces of JORC resources currently on mining leases. We are currently in the midst of a merger with King West Resources, KWR is the ticker, via a scheme of arrangement, essentially a merger of equals whereby Brightstar will end up with 57% of the merge co and King West 43% of the merge group. That merger is scheduled to complete in April. What that does for us is deliver a combined JORC resource of nearly 1 million ounces in resources, all located on mining leases, all in Western Australia. So looking at the map here on the right-hand side, Brightstar is located in around the Laverton district and King West is located down in Menzies. So that's the Goldfields Highway up to Leonora and Gwalia and across to Laverton. And the Brightstar project, we also have a processing plant on care and maintenance, circa 500,000 tonnes per annum. We have mining studies underway, which will be due for release as a scoping study in May, and then moving straight into a pre-feasibility study. We've just launched a 6,000 metre RC drilling program up at Laverton, which I'll discuss in a moment, and King West just announced a 1,000 metre RC program down at Menzies. What this merger really enables us is to become a material participant in the WA gold industry, really seeking to be the next gold developer, I suppose, on ASX after a suite of developments like Bellevue and Calidus are all in production now. The critical mass of just shy of 1 million ounces. Look, there's a lot of exploration upside there, so we're really hopeful we can grow that quite substantially, organically, and also assessing potential inorganic M&A opportunities. Just touching on the corporate overview. So for Brightstar as a standalone entity, we've got a market cap at 2 cents today of circa $17 million, a couple in the bank, so an EV of about circa $15 million. Pro forma basis, post-merger with King West, we're circa market cap about $30 million. So for 1 million ounces and a plant on care and maintenance, we think that's pretty sensible value and with some substantial upside. Just touching on the board and management. So at Brightstar, I've just joined as Managing Director. I've been in the seat for about 1 month. Came out of investment banking, corporate finance for 10 years and geology background. Josh Hunt, Executive Chairman, is a lawyer, and Tony Luau works in finance. Through the merger with King West, there's some substantial mining experience joining the team. So Dean Valve is the Chief Operating Officer at King West. He just joined likewise about a month ago. From Calidus and then Hot Chili. So Dean is a mining operator and done feasibility studies and built operations. So he's a great pair of hands to have in the business. John O'Dowd's currently Managing Director of Kaiser Reefs, a gold miner, in Victoria. So likewise a good resource to have in the business. Just touching on the regional overview, it's quite topical at the moment, what's happening in the regional consolidation. So looking from the southwest to begin with, you've got King West here, as discussed, at the Menzies area. Moving up, you've got Genesis here in the light orangey pink, and then St Barbara, so they're merging at the moment to form Hoover House. Moving east, you've got Kin Mining in here, then Daisy, and obviously with the transaction with Genesis as well. So what's actually happening in this region is pretty dynamic. For us, it's really important to understand the regional context because the processing solutions in this district mean that having a processing hub out in the Laverton district is going to be really important. So for us, the work streams ahead is essentially just a production restart. So drill outs of all the deposits, working through feasibility studies, and looking towards getting into production. Aspirationally, we'd like to have a PFS out by the end of this year and a DFS out in the first half of next year. That would enable construction opportunities and essentially mining commence at the back end of next year. Just a quick focus and a zoom in on the Brightstar tenements. So as I said, this is Laverton right here. Corktree Well is going to be the hub of our operations. It's currently a 250,000 ounce resource, significant exploration upside that I'll touch on. Given Brightstar's storied corporate history, there was a period of time, and it was previously known as Stone Resources, where essentially not one drill hole was drilled for nearly 10 years on any of these tenements. The previous company spent $60 million in debt building a plant and never actually turned it on in any anger. So that for us is a very large asset. The exploration upside's material, given it sat there dormant for 10 years. So Cork Well will be the baseload feed of the operations coming down south of Laverton, where the plant is located just here. We have 100,000 ounces immediately adjacent to the plant, and the Alpha deposit, which is just over 100,000 ounces at 2.3 grams, about 15 k's from the plant. So for us, what we'll be seeking to do is generate high circa 1 gram baseload feed out of Cork Well, and blend that with some 2 gram dirt coming out of Alpha. All these resources, are located on mining leases and all open along strike and at depth. So we're pretty keen to get in there and get some drilling underway. This is the program that we've just kicked off, 6,000 meters, circa 30 holes at Cork Well. For us, this program is important. It's going to be targeting extensions and growing the resource, but also taking a lot of the inferred material into indicated, which will underpin the mining studies. There's kind of red triangles through here are all the drill collars that we're going to be drilling. This shape, mineralized shape here, as you can see, is the current resource. That's the 250,000 ounces. Essentially, this was mined in the 80s, so 40 odd years ago. This kind of beige shape underneath the drill collars is the waste dump. So what we see is a real opportunity to drill. Essentially, you can see where these are located, to really infill this gap where the resource stops here and where it is up here. So that's circa 500 meters of strike that's never had a drill hole. So we're really excited to kind of get in there and do these ones. These holes through here are important to infill this area where the resource kind of pinches out a little bit. So Brightstar released an announcement on the 20th of December last year. There was a drill hole collared just butted up against the waste dump. They hit 6 meters at 3 grams. That importantly was about 100 meters vertically below the resource in that area and 150 meters along strike. So for me, that tells you that the mineralized structure is still live. That's all grade, which means we'll be able to add some ounces through that little area there. So as I mentioned, this is 250,000 ounces. This will be the baseload feed. Aspirationally, we think this could grow quite substantially. Notwithstanding, there's also significant kind of regional upside as well. There's a prospect 2 k's to the north called Delta 2, which we're excited to get back out and drill. We think could have the potential for a maiden resource as well this year. So touching on the processing infrastructure that we do have south of Laverton, as I said, it's just shy of a 500,000 tonne per annum throughput. Been on care and maintenance since 2014. This ball mill was installed in 2014 and never turned on. Brand new gravity circuit here, never turned on. A substantial amount of capital was spent here. So this photo was taken about 18 months ago by Como engineers. They did a refurb and restart study for Brightstar. That placed a capex of $5.5 million to turn it back on to a 650,000 tonne per annum plant. For us, taking a step back, if you backsolve what a head grade going through the plant would look like, essentially you'd be a circa 35,000 ounce gold producer. And in this current market, look, that's subscale and that's not going to make any sense. So what we're doing is we've got GR Engineering, Greza are in there doing a refurb and restart study at the moment, but really assessing the capital requirements and time it's going to take it maybe to 1 million tonnes or even 1.5 million tonnes. And aspirationally, that would take us to north of 100,000 ounce gold producer. This is a photo I took about a fortnight ago from the ROM pad, looking to the crushing circuit in the foreground, ball mills here and the tanks. We've also got some substantial non-processing infrastructure. We've got a 60-person accommodation camp, an airstrip, light vehicles and the like. So for us, this has got a significant and demonstrable replacement cost. Look, it's substantial. We've done a lot of work on what we think it's kind of worth in the current market. For us, it also enables a pretty significant time saving for a restart operation. So for us, we're not a greenfields developer. We're not going to need $150 to $200 million to get back into production. It's going to be a low capex restart. Just quickly diving into the King West Resources side of the picture. So this is the company that we're currently merging with. As I mentioned, they're just around Menzies. Menzies was historically a super high grade goldfield, mined 800,000 ounces at just shy of 20 grams. We think this is an opportunity to really deliver grade to the plant. You can see on the next slide, I'll touch on it now, some of the hits, 5 at 8, 2 at 9, 5 at 10, all really shallow. In December last year, they announced a 45,000 ounce resource at 5.2 grams in a shallow pit within their overall global resource. So this has got a very real opportunity to blend 3, 4, 5 gram dirt from Menzies and taking it all out to Laverton. By road, it's circa 250 kilometres. The current quotes we're getting for trucking, circa 15 cents per tonne per kilometre, is about a $37 to $40 haul. In gold equivalent parlance, that's about half a gram of gold. So if we can get stuff out of the ground at Menzies for 3 grams or north, it's really going to deliver to the plant about 0.5 of a gram less than that based on the trucking costs. Just quickly touching on the regional consolidation I touched on. This is really important for us when we look at what's happening in the district. So Dacian Gold's just put Mount Morgans on care and maintenance. That's a 3 million tonne per annum plant that's now taken out of the picture. If Hoover House completes with Genesis and St Barbara, essentially Gwalia is going to be full from next year with the Ulysses dirt and the Gwalia underground. So at the moment, St Barbara and Gwalia are toll treating a lot of opportunities in the district. That's now going to be off the table for third-party processing. Mount Morgans is turned off. There's no opportunities to go through Sunrise or Grannies. So essentially, for us, we look at this district and say, well, if we can have a plant up and running that's circa 1.5 million tonnes per annum, with this whole kind of district through here, it really opens up some toll treating and toll milling opportunities for stranded juniors, and also some other opportunities from an M&A perspective. And for us, that's quite important. Just lastly, touching on the peer comparisons, look, we think, like everyone, we're quite cheap, trading at circa $30 per ounce. As you can see, we've got significant infrastructure that underpins what we're looking to try and do. Looking at this peer comps, there's some great companies here with good assets, but almost all of them are going to be greenfields developments. They're all going to need $150, $200 million to build. We're going to be orders of magnitude less than that. So we'll be essentially the next cab off the rank after Black Cat, I'd imagine, after their Coyote and Paulson's operations, to be the next gold producer on the ASX. So on that note, I'll just leave the summary slide up here and hand it back to Jane.
Alex, thanks so much for the great presentation. We've had a few questions that have come through. This one's actually from a Twitter follower. So in addition to the 5.5 mil in refurbishment costs, do you have an estimate on the CapEx costs associated with going into production?
It's a good question. That's what we've got GR Engineering doing the work on at the moment. And it really comes down to a function of how large we'd like to make this mill, Jane. So if we, as I said, that 5.5 was circa 18 months ago. So in this current inflationary environment, look, it's probably, that number itself is probably 7 or 8, I would have thought. But it really comes down to how large we'd like to make it. And given the infrastructure we've got on site, like, it's not going to be a large number. It's maybe an additional large ball mill, bit on the crushing circuit, and additional tanks, and the tanks are relatively cheap. So we'll have a good handle on that by May when the scoping study from GR Engineering is released.
Thanks, Alex. And just mindful of time, what can shareholders look forward to over the next 3 to 6 months?
Yeah, so I suppose the exploration on both sides. So certainly at Brightstar, we've kicked off a 6,000 metre RC drilling program. As I said, we're straight into a feasibility study or scoping study, due for release in May. So we'll have drilling results essentially from April onwards. The merger should complete in April, scoping study to come out into May, and that'll go straight into a pre-feasibility study. So for us, we'd like to know where we stand by mid-year in terms of what the operation would look like and where we can take this project.
Perfect. Well, look, that is all we have time for today. There are a few other questions that have come through, but I'll encourage webinar attendees to reach out via the contact details on the bottom of the ASX releases. But Alex, thanks so much for your time.
Thanks, Jane.